Hello everyone, welcome back to our channel. It's been a while since we posted. I apologize for that. However, we're back on track and we are now going to start our fifth video in our 11-part video series called Getting Started in Real Estate Investing. And if you missed our last videos, feel free to go back and watch them. I have them in sequential order. So if you are interested in getting started in real estate investing, I would highly recommend starting with the first step and then working your way up through this step. And so this will be step number 5. And what we're going to talk about in today's video is getting pre-qualified. And what that means is what we're going to be talking about is taking the step before you actually go out and maybe identify a rental property that you're interested in or an investment property that you're interested in, going to talk to a lender. A lender could be your bank that you currently bank at. It could be any bank. It could be a private lender. It can be a lender that somebody recommends to you. But I would personally recommend starting with your personal bank that you bank at and go from there. Ideally, smaller community banks tend to be a little bit easier to work with and tend to give better terms than your bigger banks. However, if you bank at a bigger bank, again, I would start there. And there's no reason why you couldn't go to maybe several different banks and start looking at their different terms and things like that. But find a bank that you are comfortable with, either your personal bank, maybe a bank that somebody else recommended to you, and sit down with one of their mortgage persons, whether it's a loan officer or whatever they call them, and have them begin to screen you. They're going to give you a list of documents that they're going to want from you, and what you're going to do is you're going to take that list and you're going to go through all your documents and you're going to submit it back to them. And the sooner you do that, the quicker that you will get a response on getting pre-qualified. So let's talk about what these lenders are going to look for when you go to them and you tell them that you're interested in getting pre-qualified for a loan on a potential investment property. So some of the documents that they're going to want from you are going to be your last 2 years of your tax returns. They're going to want to see your income. They're going to want to see your debts. They're also going to want to look at your debt to income ratio. They don't want that to be too high, because if it is, then you're a risk and they're less likely to lend to you. So what do they look for? Anywhere from like a 30 to maybe a 43% range of debt to income. And if you don't know what that means, basically what that means is they're going to look at all your debts and they're going to look at your income, and what they're going to want to see is that your debts are no more than 30 to 43% of your income. And really I think that varies from like lender to lender, bank to bank. It also helps determine whether you're going to get a better terms on your loans or not. So ideally, if you're closer to the 30%, you're much better off than if you're closer to the 43%. And I also think there's some loans out there, like if you're maybe a first-time investor, they're going to want to see more of the 30% than the 43%. And then also what they're going to look at is your credit score. It kind of goes hand in hand with your debt to income ratio. The higher your credit score, the better, obviously. Ideally they're going to want to see somewhere around a 680 credit score or higher. Obviously the higher the better, the lower the worse. I think once you start getting below like the 680, you're definitely a higher risk to the lenders, to the banks, and they're less likely to pre-qualify you for a loan. And quickly, let's talk about how long of a process this might be. It really depends on the bank or the lender that you're dealing with. Different banks and lenders, depending on, I guess, like their staff size and the size of the bank, the lender, can determine how quickly or how slowly they get through your pre-qualification application, your pre-qualified application. Also, it depends on how quickly you submit your information. The quicker you submit it, obviously, the quicker that you're going to get an answer back on your pre-qualification status. And then also, what type of lenders, what type of banks do you want to go to? Ideally, you want to go to maybe like smaller banks, community banks. They tend to lend out a lot better. They're a little bit more investment friendly than the bigger banks. And then you can also ask around, maybe ask other investors that have invested in some properties, some rental properties. Maybe ask them who they use or who they recommend. That would be a really good place to start as well. But regardless, start somewhere. Don't sit around, don't just wait for something to come your way. Instead, you go out there, you take initiative, and if you don't know where to start, again, start at your bank, go talk to somebody there, tell them what you want to do, and they will get you started with the process. And why is this important? Well, this is important because number one, you need to know if you're even able to qualify for a loan. Because if you can't qualify for a loan, that's going to really diminish your options. Again, there's other options out there. Obviously, we talked about that in the last video about how to find money, but more than likely you're going to need some sort of a loan to qualify for, so that you can use that. So you have an idea of what type of property you can go after. You have an idea of how much you can go after. So that's why I want to get pre-qualified. Before I bought my first investment property, that's exactly what I did. I went to my bank that I banked with. I sat down with somebody there, and they told me what I needed to do to get pre-qualified, and that's what I did. I moved forward, submitted all the documents, did everything they asked me to do, and within a couple of months, I had everything I needed to go after my property. And again, this process could take anywhere from 1 month to maybe 3 months. I guess I want to close with this. Do the work, go after it. Don't sit around and wait for something to come your way. Take the steps, because as you take these steps, if you're proactive with taking these steps, you're more than likely to take action when you find that investment property that you like, versus those that just talk about it. They never take these steps, they never take initiative to start doing the work so that they can set themselves up to be in a position to buy that rental property that they're looking for. So I hope this video helped you guys out a lot. If you have any questions, please feel free to leave a comment. I'll be happy to answer any questions that you have. Thank you. God bless.